Next big one, Coca-Cola. A big thing to remember about Coca-Cola is that we did just see Pepsi earnings earlier this week. Pepsi did pop because of their earnings. Coca-Cola, Tuesday before open, mostly sells this past month. We see a call purchase here on the 2nd, so at the beginning of this month for 2026, January 2026. The only thing that I don't love about that one is that it's only 96K, which is fairly small. Prices stayed fairly flat since then, but all the rest have been sells at the $75, $70 strike, selling of those calls. So that's indeterminate. What I would say is Coca-Cola does report Tuesday before open. Those of you that have STAX, keep your eyes peeled. There's a very good possibility that we'll see, some buying of calls or puts. And what you're going to be looking for is that blue bar, the unusual situations. The blue bars, especially if we see them for the strikes of August 1st, August 15th, those are the two closest expiration dates. And especially if they spend premiums, I would say upwards of 200, 300K would probably be the range where you would want to take a little bit more interest in. So we'll keep an eye out for that. In terms of the chart, we're kind of in this flag pattern. Coca-Cola is a good company. They do well overall. They generally do well with their earnings. But again, like I said, earnings can be either up or down, even if it's a beat on their earnings revenue and per share. So there's a big gap down below. I don't think we're necessarily going to see that unless we see bad forward guidance or retracted forward guidance. But at the end of the day, I think we're very likely going to stay around in this area if we do peak up to one of these other levels. I don't see this shooting off in any certain direction. What do you have to say about it, Max? Yeah.
So I did a breakdown. Zach's rank gave it a number 2, which is a buy. ESP is expected at a negative 0.46%. All you need to know about that, it's not bullish whatsoever. Operating margin is projected to be down 10 basis points. Revenues expected between 12.5 to 12.6 billion, which is up only 1.9%. EPS, we're expecting 83 to 84 cents, down 1.2% from year over year. Now, what's moving the needle here? Price power is still reigning supreme. They leaned heavily on pricing / mix strength. 5.8% boost expected. Premium product strategy plus inflation pass-throughs equals margin armor pretty much. However, volumes are declining in their core markets, which are North America and Mexico. And that's just more representative of consumer fatigue in general, not just specifically for Coca-Cola, but it's showing like even iconic brands can't keep up or keep people interested or motivated to keep buying in a sense. Global headwinds are also brewing. Currency is expected to knock 3 to 5% off revenue and EPS. China's low confidence is the main reason for that. Eurasia and Latin America are facing inflation pain, and U.S. logistics bottlenecks also threaten their margins as well. Basically, their international exposure isn't all upside for this incoming quarter. So that's something you'll want to look at to see if it's been priced in yet or not. Because again, those are those numbers that will come out during earnings versus something that they can give a definitive stance on so the market can react to. Digital and innovation, silent wins here. E-com channel growth is doubling in many countries right now. New marketing tech plus pilot programs targeting Gen Z consumption patterns. And they also have brand diversity, which gives them different options. So like Coke isn't the only thing they make. So like they don't have to only rely on soda at the end of the day. Management has been investing smart, but results may take longer to show in numbers. So very much like tech, when someone releases a new product or a new strategy or a new product in this case, in Coca-Cola's case, a new product would be a new strategy or new marketing techniques that they're bringing into play. Typically, like a new product for NVIDIA, we won't really see the results of this for about 12 to 18 months realistically. Their valuation check, people think it could be too bubbly. Their forward PE is 22.7, but the industry average is only 17.9. But they are just over the S&P average, which is 22.59. It trades at a premium compared to its competitors, in this case, Pepsi, Keurig, and Monster. Expectations are already priced in. That is one thing for Coca-Cola. Every earnings, it will be priced in for the most part. So usually the moves are a little more muted unless we're going to see some more downside. To the upside, though, it sounds like a lot of the positives for it have already been priced in at this point. So we're not going to see an aggressive or crazy bullish pop unless they have a ace in the sleeve at this point.
Yeah, very good. Another thing to consider too, because of Pepsi, this is Pepsi that reported earlier last week. Pepsi had a double beat, had good forward guidance. You saw the pop over here. So if you go take a look over at Coca-Cola, they had the same reaction in terms of a pop the next day, but it's really sold off quite a bit in terms of that pop from there. So again, like Max said, a lot of it's probably priced in already. Something to also consider is if you take a look at the big picture of Coca-Cola, this used to be one of Warren Buffett's biggest holdings. You know, they're just in this giant uptrend since 2008, 2006. So, and overall, you can see it's just upwards from all the way back in 1960, 62. It's just been headed up. So, company does really well. People always buying their soft drinks. Company is well run. But at the end of the day, we need to understand too. Oh, here, by the way, I added on a logarithmic chart. But understand that down the line, it is a great company because of also their dividend yield. They do pay a dividend. It's always been fairly consistent. At the end of the day, it is one of those safer companies to purchase for the long run, but it is somewhat of a slow mover. So it's one of those ones that you probably want to put into your retirement portfolio type of stocks.